Hey guys, welcome back to my channel. It's your boy Marcelino. Today we will be talking about biggest mistakes day traders need to avoid. So first of all, before we actually start, I do wanna ask you guys to comment down below what you think as a trader was one of your biggest mistakes that you made. This can actually help the next trader that's actually learning, the next day trader that wants to make it out of the struggling phase that we go through. Okay, so comment down below what you think was one of your biggest mistakes and then how you actually got out of it. Okay, so mistake number one that I'm looking at from my point of view, from my personal hawk as a trader, was first of all coming into this space as of forex, or just as a trader as a whole, thinking that it is a get rich quick scheme. So trading in a whole, guys, is not a get rich quick scheme. The faster you actually get out of that mindset, the faster you will be able to adapt a consistently profitable trader's mindset. Okay, so get out of the fact that you can get rich quick or you can get rich over a year. Now, I'm not saying that with trading you cannot get rich quick, because you can. But what I'm saying is that most people who come into this space with that mindset, more likely than not, quit within 6 to 12 months, or even after that, if they do not get it out of their mindset. Okay, biggest mistake number two, guys, on my list is focusing on the money and not on how the markets actually move. So what do I mean by that? Whenever I used to enter a trade on MetaTrader 4, and I'm looking at the chart, or I'm looking at my phone, and the phone is blue, and I'm thinking, damn, like this thing can really go up, this thing can, and my analysis is saying, look, I'm in a buy on Nasdaq 100 back in the day. I'm in a buy, and my analysis is saying this thing is about to reverse, this thing's about to reverse. But I'm looking at the money and I'm saying, look, there's a big possibility that this thing can still go up. But instead of closing the trade, I'm still focusing on the money instead of actually focusing on how the market moves, and just in a whole, not actually looking at what moves the market in yours for your specific strategy. So with me, I trade based on structure, I trade based on those type of things. So I wasn't focusing on actually learning how the market moves with my specific strategy, how things actually work, the nitty-gritty, the details of the specific strategy. What I was focusing on instead was looking at the monetary fact of how much I can actually make with this. And that actually plays into the fact of thinking that forex was a get rich quick scheme. However, it's not. So guys, avoid thinking that forex is a get rich quick scheme. Number one. Number two, so far, avoid thinking that avoid thinking about the monetary factor and focus on what moves the market, or the skill behind trading. Okay, tip number three that I have for you guys to avoid is what I like to call strategy hopping or strategy jumping. What it basically is what I did for the first 2 years of my trading career, I would like to call it. So what I did was I went from trading technicals to what I thought was trading technicals, first of all. So support and resistance. So technicals, just support and resistance, maybe a trend line here or there. Then I went and I jumped to fundamentals, trading news. This was late 2017, 2018, mid 2018. I started trading news into 2019, trading news, because at that point the news were moving, guys. The news, the effects the news had on the market, it was really good. So trading news, okay, we're there. Then after that we moved back to technicals, but now we trade in a trend line strategy. I noticed that the trend line strategy wasn't making me enough money, or the stop loss at that point was too big. I wasn't looking at percentage gain. I'm just looking at pips. I'm looking at the amount of money that this stop loss actually has, as like it actually requires. And I'm thinking, oh no, this is not going to work. So we leave that behind. We then jump onto trading Nasdaq with technicals. We make some money, we're profitable, we lose a lot of money, we make some money, make some, exactly the same as what we did with the fundamentals. Okay, after that we move on to volatility 75. We go back to Nasdaq, and I was consistently jumping from strategy to strategy to strategy to strategy. And I think this plays with point number 2 of focusing on the money. I think what traders do is when they start losing with a certain strategy, they looking at the money that they're losing because they are doing what I'm gonna mention after this. They losing so much money in comparison to what their account is, or in comparison to what they can lose in life. What they're then saying is this thing must not be working. So they jump to the next strategy, and they jump to the next thing, and they jump to the next thing. What they don't realize is that every time they jump, they're starting on ground zero or level zero. You literally starting at day one again. You starting every time you jump to the next strategy, you starting at day one. Let me make an example for you. Trader A, what's the hot strategy right now? Smart money concepts, SMC, smart money concepts right now. Everybody's trading smart money concepts. Let's take a great example. ICT trades smart money concepts. He's the creator of it, whatever you want to call it. He innovated that space. Okay, so example A, or person A, started learning from ICT, or anybody who's teaching smart money concepts. He's a smart money trader. He then, after a month or so of learning, decides to open up an account with a broker, opens up an account, makes some wins, then starts to lose. He loses for the next 2-3 months, based on the fact that his psychology is starting to get out of hand, everything's starting to move. What he then sees on Instagram is Q Banks. If you guys don't know Q Banks, this is a bit of free advertisement for Q Banks. He made $1 million the other day. Really good trader. He trades based on a lot of retail terminologies and retail thought pattern. Okay, so Fibonacci's and all of those things. So he's trading confluence in terms of retail things. So that's Q Banks. So now he sees Q Banks on Instagram, and he sees Q Banks is killing it. Q Banks has multiple Lamborghinis, he has a Bentley, he's killing it. And he says, no, this has to be the way to actually make money in Forex. So he joins Q Banks. What he doesn't realize is that after that 3-4 months of studying ICT, now he's joining Q Banks. He's going to go into studying Q Banks' course, studies it, makes money, but he's gonna run into that same problem when he starts losing. What you guys don't realize is that specific mentor that you actually followed is making money because they have actually perfected that specific strategy. Guys, what you need to do is you really just need to put the work in with that specific strategy and give it time to play out. Give that strategy time instead of hopping. In my personal opinion, I think you need to at least give your strategy 6 to 12 months of back testing, forward testing, all the types of tests, to then look at the results that you got after journaling everything, looking at the results that you got for that specific strategy, and then say, I can stick with this for the next 5-10 years of my trading life. That then gets me into the point of trading, guys. It is a career, and I think this is a big mistake that people get into the market with. They think they can make money and then just leave the market and then come back and trade like it's just the market's never going to go away. I fully agree with that. But when you actually want to trade, and you're a real trader and you want to trade, guys, treat trading as a career. The same with your strategy. So we know that Forex is a niche. What I like to describe your strategy as is a niche within a niche. Okay, so you have your specific corner within Forex that you are actually using day to day. So it's like within EMS, for instance, economic management science, you have accounting. So that's a niche within a niche, or in my words at least. So the way when I studied accounting, I had to study for 4-5 years because I failed a couple of modules. Okay, but there was no way after 3 years of studying that I was just going to stop studying accounting and say, let me go study law. It doesn't make sense. How does it make sense to a normal person who's close to the finish line, close to actually attaining that degree, then starting to move into where he wanted to go into, but then now Mid 3 years down the line, you're going to go study law for 4 years, and then after that, what's going to happen is that you're going to be down 7 years and you're only going to have one degree, which does not make sense. It's the exact same thing with strategy hopping, guys. Master that specific strategy. Okay, master the one specific strategy, and once you have that down, you can then start to add more strategies along the way. And more likely than not, guys, I promise you, more likely than not, as you master your specific strategy, you will probably add more strategies to that specific one. Okay, going on to my second last tip that you guys need to avoid, or mistake that is made by day traders, which is probably the biggest one in my opinion, is risk management. Risk management, guys. What is risk management? First of all, it's the way you manage risk, what you allow yourself to be opened up to in the market. So if you have $100 account and you risk in 20%, that's your risk that you allow in the market, or what you allow in the market to actually take from you if the trade is to go against you. Okay, so managing risk will help you stay in this game for longer, especially if you're trying to get funded, especially if you're trying to become a big time trader that's going to be able to handle bigger funds, that's going to be able to actually start trading. If you guys can get risk management down, I promise you, even through the roughest of patches that you're going to go through as a trader, through the roughest of rough patches, risk management will be your buddy. It will carry you through. So when you come through the rough patches, you not only uh recovering money, but you instead of recovering money, you're making money, because you found out a way to cut your losses short and then to make money faster. Okay, so guys, focus on risk management. Please stop risking 20% of your account, stop risking 5% of your account. To me, anything above 2 to 3% is crazy, guys. Now, I do understand if you trading with your own money and you trading $100 account and you're risking $3 and you're saying I'm only making $9 at the 1 to 3 risk to reward. Marcelino, what am I supposed to do? Take it as you learning a skill. That's it. You're learning a skill. You're not risking anything more than $2 to $3 on that $100 account, because it's so easy to scale up when you get a bigger account. You are your brain is already trained, and your neurons, it's a whole psychological thing where you are already moving with that 1-2% of gain, so that you can actually see what your win loss ratio is, what your percentage gain per month is, so that you can present that to investors, or in terms of confidence. Okay, then uh my last tip for traders to avoid, or one of the biggest mistakes, I think it's not a mistake, I think it's just traders not doing it at all, is treating trading as a business, guys. So as I mentioned, percentage gain. If you look at Tesla, you'll be able to know what their gain was over the last month or over the last year. Do you know, as a trader who's been trading for 2 to 3 years, what your gain or your loss was for the whole year, for the quarter, for the month? Are you journaling your trades so that you can keep an account of what you have done 2020 first quarter, 2020 second quarter. So then when you're comparing quarters, or you're comparing annual gains or annual percentage growth, what your company is doing, you are your company as a trader. Remember that. So as a trader, you are the sole person that is responsible for everything. Invest in yourself. Look at what you're doing wrong, look at what you're doing right, and start journaling, guys. Start journaling. Let me add that too as number 6. Journal, 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 journal everything. Journal your emotions, journal your trades, journal every single thing, guys. Journal it. Okay, so those are my 5. I added a bonus one with journaling. My 5 biggest mistakes made by myself and by most day traders, guys. Most day traders make these mistakes. If you are within the first part of your trading, the first year, and you came across this video, look at it, write these things down. So it's, don't look at forex as Number one, don't stop thinking about it as a get rich quick scheme. Number two, don't focus on the money, rather focus on how the market moves. Number three, stop strategy hopping. Focus 6 to 12 months on one specific strategy. Number four, risk management, risk management, risk management. Number four is probably the biggest one of them all. Risk management. Just remember, it will get you through most of the rough patches. Number five, treat trading as a business. Treat yourself and take yourself seriously as a person, and then you'll take yourself seriously as a trader and as a business. Okay, those are the five things. Take it into account as you move forward within your trading, and I promise you this will help. Guys, comment down below if there is anything that you have taken out of this video. Comment down below if there's anything that I have missed and that can possibly help another trader. Comment down below, like the video, subscribe for some more videos, more live trading coming too, guys, more live back testing too, to perfect that strategy of ours, your strategy, my strategy. Thank you so much for tuning into my channel. Peace out.